So the thing is that in today's session we definitely gonna discuss this thing, right?
M&W.
M&W. So how this particular thing works, okay? And before that, like what is candlestick patterns, what are support resistance, how to draw trend lines, and after that definitely what is divergence, right?
Divergence. Yeah.
So we will utilize all these concepts in this particular thing,
In this
okay?
M&W strategy.
Yeah, in that particular M&W strategy. So what happens
Yeah.
that in case of this particular M, okay, if you will observe, so it is going right here, if you will see. So this is considered as leg, right? So this is a leg, so we can say this is the step 1, okay? And in this particular step 1, what you will see, just a second, so you will see that it started going up, right? M is started going up. So on this particular thing, it started going up and it is taking resistance right here,
Yeah.
right? So it take resistance, it comes back again to this particular level, which is definitely known as its neckline level,
Yeah.
right? And at neckline level, it is taking some kind of support
Yeah.
as buyers are pushing that price up. So now the price is going up, and here again it is taking some sort of resistance, right?
Definitely.
As this picture is complete, so you know that this particular thing is taking resistance right here, but in the live market it looks like this, right? So the big question you have at this particular moment, that whether it will come down or it will break. There are only two things, that either it will come out or it will break, right? Apart from that, there is a third thing, that it might consolidate something like this, but it is very
Right.
rare situation, okay?
Like moving sideways.
Yeah, sideways market, but it is very rare in this particular setup. So here what you will observe, either it will make it, or either it will break it.
Break it.
There
Yeah.
are two kinds of things only happen, but the probability of breaking this is approximately 20%, right? And the probability of making this is approximately 80%.
It is not approximately. It is moving 80%.
Yeah, something like that, okay? So the thing is that if this particular thing is working for 80% of the time, now what you can see, that if you take risk reward ratio of 1, I guess you know what is risk reward ratio, right?
Yeah.
Okay, so you know what is risk reward ratio. Then if you take risk reward ratio 1, which means that you are risking $1 in order to gain $1, correct?
Yes.
Now what happens, that 1:1 is your risk reward ratio. So your risk in total strategy, like let's say that your failure rate is 20%. So this particular 20% indicates that in 10 trades, 8 of your trades are going to be successful and 2 of your trades are going to be a failure, for example, right? So if you take 1:1 trade, so for that 8 trades are successful. So for, let's say you made $8
And I have lost $2.
and you will lose $2.
Yeah.
Ultimately these two things, if you will calculate an overall result, so you will end up ending plus $6, right? So this is technically you are profitable, correct?
Yeah.
But in order to reach this thing, like you are sticking to the rules, you are following your psychology, you are not being in control of your psychology, this particular thing definitely takes time. It is slow process, it takes time, right? 6 months, 7 months, the it depends how dedicatedly you are working on it, how dedicatedly you are working on improvement of it, right?
Definitely.
Definitely. So this thing acts like this. Now how we conclude, how do we conclude, just a second. uh, this eraser. this eraser. I guess I have selected some large size eraser and it is not.
I think you can reduce the size. Eraser.
Let me see that if I can do. Yeah, okay. Okay, eraser is itself clicking on that. Okay, great. So the thing is that at this particular moment, your risk is 20%, your accuracy risk is 20%, and your accuracy reward is 80%, right? Now,
Yeah.
here if you will see that definitely you know that there is some sort of resistance level, and how we confirm that this particular price is coming down? Definitely by watching a red candle. Let's say that if you see something is going up, coming down, and then again going up, now at this particular moment it is your turn to stay aware in the market, and then you are like, okay, now it is my turn. I will wait that either it will create a red candle right here so that I can initiate my entry, or either it will move up, right? Until and unless the candle is closed, right? The candle is closed, this particular red candle is closed, you will not initiate the trade, right?
Yeah.
Okay, so now let's say that we have a M, right? And this particular M does not looks like this always. If this look like a phenomenal M, this is a great trade, but sometimes this M looks like this, something like this, then it falls, then sometime it looks like this, right? Then it falls, sometime it looks like this, something like that. Okay, so the thing is that the concept here what we utilize is, first you are looking for double top scenario, then it is the first step, right?
Yeah.
Now the second step that you will look right here at a bearish engulfing candle, right?
Bearish
Sorry,
engulfing
no, sorry,
candle.
not bearish engulfing, any kind of bearish candle. It is more better to say like
Any kind of
any
kind
bearish
of
candlestick. Like let's say it is any red candle, right? So
Yeah.
you will look for any red
candle.
candlestick. Okay. So what you will see, first this particular thing, that is it going down, second red candle closer, okay, and the topmost priority before first and second, the topmost thing that you need to observe is RSI, right? So how does RSI works?
1 second.
Yeah.
Hello.
Yeah.
So I just got my screen blank. So I'm just looking at the 100. 1 second. Yeah, I'm back.
Okay.
So am I visible?
No, you are not
Like-
visible.
So I am not visible.
Just turn off your camera and turn on it.
Yeah.
Yeah, you are visible.
Yeah.
Okay. So now we comes to our topmost priority, right? Or you can say it is a filter. Okay, it is a filter that separates out from the it phenomenally increases the probability of your trade, right? Let's say that if there is some sort of double top always that is forming, if it is having probability of 50 to 60% win rate, right? So once you apply the RSI divergence concept right there, so it increases to 80 to 90%.
Yeah.
So that's why we utilize the RSI divergence concept. It is not like simple divergence. How we utilize this, let me tell you, and why this particular strategy works always, I'll tell you this only. So what happens that at this particular place, if you observe, so on first top, the value of RSI, there is a band of 70 and 30 we have discussed, right?
Yeah.
So on first top, it is top one, let's say T1. So on T1, the value of RSI, RSI should be greater than 70. It should be greater than 70. And greater than 70 signifies over what?
Volume.
Right? It is overbought zone greater than 70, which means that price is overpriced or it went to overbought zone. Okay. So now in the second scenario, let's say T2, it is top 2. On top 2, if you will see that it fails before exceeding this 70 level. Let's say that this level is of 65.
Yeah.
Okay. So here it was 72 and here it was 65. So RSI is a momentum indicator.
Yeah.
If RSI is a momentum indicator, so what does this indicating? It
It is
indicating
diverging momentum.
that there is momentum is falling.
Yeah.
Momentum is falling, which means that buyers are not showing interest in the market, because at this particular price level, let's say that this price level is of 1.7169. Okay. So at this particular price level is same, price at same level at T1 and T2.
Yeah.
But momentum, if you observe, so at T1 the momentum was high to 72 and at T2 the momentum was low to 65. The price at same level but momentum is falling. What does this indicate? This indicates that buyers are showing less interest in the market, and this particular price, whatever you are observing right here on T2, so technically the price of T2 should be like this, right? Like this. Let me show you. Let me show you one thing first. Let's see. So if you will see that RSI is following the price. For example, it is coming down. Okay.
Yeah.
RSI is also going down. It is going up. RSI is going up. Right. It comes here and then it comes here and then there. Again it started to fall. Again RSI started to fall. Right. We have seen this particular thing. RSI follows the price.
Yeah.
It falls. It falls. As it is a lagging indicator, right? As it is a lagging indicator, so it forms after the formation of chart. Definitely. Okay. So you have seen that RSI is following the price.
Yeah.
Now, how we take benefit of this particular thing? How we take benefit? So, for example, that we have seen. What we will do? We will make some sort of this particular thing. It is our T1, it is our T2, and our point of initiation of the trade or entry of the trade, it should be this particular level. Okay. And stop loss level, it should be somewhere above this last swing. Let's say that you have top 1 level, so you can make your stop loss it should be 5 pips and then 10 pips above it or 8 pips above it. So you can make it from 10 to 15 or 16 pips from this particular level. You can set genuine stop loss. Let's say that here it should be a big, so you can make it above the big level, right? So you will take some genuine stop loss. Now what you will do, you will initiate an entry at this particular point. Okay. As once you have confirmed that there is this price was actually, if RSI is forming like this, so price was definitely supposed to be like this, but price is not. Price is at this level, price is something like this. Okay. So definitely we can say that there is something fishy, right? So we can say that at this particular level, on which price is right now at T2, so this price level is fake level.
This is a fake level.
Yeah, right. And momentum, if you will see, definitely if momentum is decreasing, if someone is not buying something, if momentum is decreasing right here, what does this indicate? Price increasing, momentum decreasing, divergence concept.
Definitely.
Right. But here what is happening? That price increasing a bit and momentum is falling significantly. Keep always in mind that at top 1, the value of RSI, it must be
Above 70.
it must be above 70, and at T2 the value of RSI should be must less than 70. It is the filtration criteria that you need to remember. Before watching double top and double bottom, watch the momentum at least. Go and
Sure.
check that. Okay, I'm watching a double top, and then can I see that is there any some sort of divergence there? So I will see that okay, the price is at resistance level. Definitely it will act as a resistance level. Price is at resistance level. I have found a red candle. So what my RSI is saying? RSI is saying okay, at T1 the value of RSI should be greater than 70. Definitely it should be 71, 72, whatever the value. And at T2 it was supposed to, obviously it was supposed to go up, but it does not went up, and it is going down. So it indicates that there should be a bearish divergence, and I will sell at this particular point if I found any bearishness. Any bearishness means that if I found any red candlestick, right?
Yeah.
I have initiated 2-3 trades on this particular thing today itself, right?
Oh.
And if you are in the group, I guess you also getting messages,
Yeah, I'm just getting messages
right?
in Telegram.
Yeah, in Telegram. So these are the stuffs that we look, and we can say that okay,
I'll just.
and over the time you practice this thing, then you are getting habitual with that particular thing. Then apart from double top and double bottom, you will be able to utilize this particular strategy on anything. So you can watch it. Okay. Now,
So it is the same for even like double top or vice versa.
yeah, it is same.
Currently I just set for M. So even for double bottom it is the same.
For double bottom, I'll tell you right now.
Okay.
Yeah. So
So is this strategy like the one which you said like your fake out strategy?
this particular strategy,
So this is your fake out strategy.
this is my
Is this your fake out strategy?
no. This is not fake out strategy. Fake out strategy is different.
Okay, fine.
Okay, so
Yeah.
if I will tell you the concept of this particular thing, so yeah, but before that let me tell you the target level first. Okay, so if you initiate a trade right here by taking some stop losses of 10 pips or 15 pips, so the first thing that you can do, you can make risk reward ratio of 1:5 minimum.
1:5.
Sorry, 1:1.5.
1.5. Yeah.
Right? And if 1:1.5, I mean that if you take 10 pips stop loss, then your target should be 25 pips.
Yeah.
So let's say that this is your stop loss and you met your target pips of 1:1.5, which means that you achieved 25 pips target. So now what you will do, you will dilute your 70% of the position or 60% of the position,
Yeah.
and with the rest position you wait for this level, from the level from where it started to form. This level, it started to form right here, the first leg 1 started to form from this particular support level.
Yeah.
So the target should be this particular support level itself.
Like after 1.5, like after the 25 pips you're mentioning.
Let's say that here you shorted, right?
Yeah.
Here
Yeah.
you have entered, okay, and you have made your stop losses at this particular point, and once it reaches to the level of, let's say, 25 to 30 pips, okay, and let's say that this is 25 to 30 pip level. So at this particular level, what you can do, you can let's say you have diluted 60%. For example, you have taken one lot and you have ended 0.6, you have closed 0.6, and you are waiting for more with the next 0.4. okay, so now it went down, and once it reaches the level from where this pattern started to form, you will exit here.
like with complete position.
It complete position, right?
Yeah.
Now the second thing, a lot of time it happens that once it reaches 25 to 30 pip, it reverses,
Oh.
right? So in that particular thing, definitely this particular 60% you have gained already.
Remaining 40% is just risky.
Yeah, and if the thing is that if this particular 25 to 30% reached, then work of you have, what you need to do is set your stop loss to your break even level.
Yeah. Got it.
So that 40% if reverses, so you won't make any losses. Out of it you made profit, and you
You
made
just
profit
came
of
out.
60% only.
Yeah.
So if with 60, for example, let's say 0.6, okay, 0.6 you have gained 20 pips, so it is $120.
Yeah.
Okay, if you gain, let's say, 30 pips, so it is $180, right? So that's how this particular thing works in 25 pips and 30 pips, and accordingly, right?
Yeah.
So now the third thing that you need to understand, there are different types of, whatever I am saying you is just vice versa in case of double bottom.
Okay.
Okay, so keep in mind
So
that
is this the same, like you mentioned before, that it is not always a double top, it might be even like triple top
yeah,
pattern
definitely
formation.
if it is, let's say, triple top, so what it is indicating, it is indicating that price is on same level again.
Yeah, but sometimes in triple top, the mid neck level looks even bit up. The mid
Okay,
neck mid
no
mid
issue in
neck
that.
level.
Let's say that this is triple top.
Yeah.
Okay, so
Yeah.
if this particular thing is looking like triple top to you, which is not a triple top technically, it is a flag and pole.
Yeah. No. I'm just telling like something like this.
Okay,
Wait 1 second. I'll just show.
okay,
So like so that does it even applicable for like something like head and shoulder?
no,
No. So it must be like same level, triple top of same level.
same level.
Okay, fine. So now
No, one more
getting.
thing, not always not exactly the same level. What we can
Yeah.
obviously see, how many types of patterns you will observe in the market, I'll tell you. First, definitely this is
So
phenomenal
I was
M.
just about to show something like
No,
this.
this is head and shoulder. Definitely, if it forms something like this,
Yeah.
you will just make a trend line, and once it trend line breaks, you can expect this target.
Fine.
Okay, now how many types of double tops are formed, and the same thing applicable in double bottom. Okay, so the double tops, it is first phenomenal M, right? The second M, right? Here you're like, okay, it is some sort of head and shoulder, but it also acts like that.
Triple top.
Yeah, triple top, because the price is on same level, and definitely you need to observe the RSI right here.
Yeah.
Okay, and now RSI is moving here, then again it is moving something like this. So at this it is above 70, now at second it is below 70. So at second you will short and wait, then again it goes up. Definitely your stop loss is above this level, so it will
So
not
we
hit.
can just enter even in the
Definitely
middle of
you
the
you
middle
will
of
you
the
will
pattern
enter here,
formation.
because what I am saying you, that if market is live, so if market is live, let me say it to you, that if market is live, so it is forming right it, then it goes up. So here it forms a red candle. According to strategy, you will short, because this
Yeah.
is above 70 and this is below 70, you
Below
you
70.
find some red candle out there, so you will short.
So we have multiple confirmations. And
Yeah,
we can
so
short.
now it goes down and it again goes up. So your stop loss is that particular level. So what you will do, you will wait again at this particular point
Yeah,
and it goes down, right?
fine.
And another scenario, it forms something like this M. Alright, for example, in case of I guess today, if you will see, I have given a trade in AUD CAD right here. The ideal time frame for this particular thing is 15 minutes. Understand?
Yeah.
Okay. Now AUD CAD. Okay, I guess I have not shared, but I guess yeah, AUD CAD looks good for selling.
So you have mentioned it.
Yeah, I have mentioned this, right? And I have definitely initiated this particular trade. So what happens right here, if you will see, price goes up, it comes down, again it goes up. Okay, so at this particular point, it is
So as you said, it is something below 70, and
It is-
once again when it reaches to the point, it is less than 60. Second time.
it is less than 70. Here it should
Yeah.
be greater than 70. Here it should
Yeah,
be less than 70.
7.
Right? So
Yeah.
it creates some sort of divergence. Price on the same level,
But RSI is getting down.
but RSI is saying down. And
RSI
here,
losing its
yeah,
momentum.
and here again you find a bearish candle.
Yeah.
So technically you are duty bound to enter this position.
The 3 confirmations.
Yeah, so now if you enter at this particular position, definitely that so what you will gonna do, that you will definitely achieve okay, I'm not being greedy, I will exit at here. Okay, let's say at this
Yeah.
particular level somewhere I will exit. So it is 45 pips,
Oh my god, 45 pips.
so you can take 45 pips on 15
So,
minute time frame.
so what was your exit point today? Have you just exited it, or you're still your position running?
In this particular thing, I guess, let me show you where I have exited. This is AUD CAD, right? AUD CAD at 0.9134 level. 0.9134 at this particular level here,
Oh, sorry, you just came even but
at this level,
oh, fine.
right? So
Yeah.
what I explained to you right now, it started to form right from here, it comes back, then it went up, formed some bearishness, boom.
So did you just close half of your positions, like 60% of your positions?
No, I
anytime
have
in the
not
mid?
exited my 70% or 60%. Now I will
Sorry.
tell you the reason why I have not exited this, because
Yeah.
if you will see that I have shorted at somewhere this level, or I don't remember, but I have shorted at this level. Okay,
Okay.
because I have spotted this trade a bit late. I guess this candle was formed until, if I spotted this at here, I definitely would have shorted at this position.
Oh,
So what happens, that if you will observe right from here, that it takes a pullback only at this point. After that,
Yeah.
I was waiting for any green candle.
oh. So it didn't happen.
So it is no green candle out there,
Yeah.
right? Until at this particular position. So it was no green candle out there. So I have not
So
exited.
So you already exited somewhere there, right?
Say,
So just before the green candle that had formed.
at this particular thing.
Oh, fine.
right?
Yeah.
So the work of you is what you are expecting as your profit. Here, if you have initiated this particular trade, let's say at this particular level only, okay, so technically your stop loss, you are like, okay, I will take this stop loss. No, you will take the stop loss of 18 pips, right?
Yeah.
18 pip, or let's say to make it 15 pips.
15.
Yeah, 15 is cool. And your risk reward ratio is something like this. So it is 2.66, means 1 ratio 2.6 risk reward ratio. This is, but it's absolutely fine.
Okay.
Yeah, so that's how this particular thing works, that if momentum is falling, we will definitely gonna short that. Now second type of M pattern that you will observe in AUD CAD or any pattern, it is a fake out.
Oh.
Right,
So you just entered even in that trade too?
I have initiated a sell at this particular position,
Oh.
and why I have entered as a sell, so let me tell you.
So could you just tell me that divergence was within 70 and it was like following the pattern?
Here it was not the divergence concept here. The concept
Oh.
of this was fake out.
Fake out. Okay.
What fake out strategy tells you, that if a particular price is trading in the zone, it is following some sort of support, then resistance, then again it is following the support, and it gives a breakout, and after giving breakout, it again fake the breakout and comes to the zone in which, in the particular zone, it is trading, right? So whenever this scenario happens, that it goes up and comes again back to the zone, so we will assume that this thing does not happen in past. Okay,
Yeah.
so now what we will conclude, that price goes up, comes down, goes up, and now it is again coming down, so we will sell accordingly. So if we
Fine.
will not consider this particular fake out, so how it is acting for you?
So it is acting just like a double top.
Double top, because it comes to the zone,
Again it is back into the zone.
again
So,
it is back into the zone. So as per fake out strategy, we are gonna initiate the trade.
Yeah.
Any doubt in that?
No.
Okay.
So just with this fake out, we can just initiate it without the confirmation of
Yeah.
RSI at some time.
Just if fake out happens, you just don't need to always look at RSI, but if RSI gives you some sort of confirmation out there, so I'll tell you, let's see.
Yeah.
So what is the level of RSI right here,
It is 70,
and what is here?
68.
So is our rule followed?
Yeah.
We
So
can short.
even a momentum fall of like 2 is even acceptable. Huh?
Say
Like less than 70, anything less than 70, like when it is
any
losing its
things,
momentum.
any second thing, if less than 70, in case of double top, we are shorting that.
So
First thing
fine.
should be greater than 70, 71, 72, 81, 82, whatever it is, and at second top it is less than 70, we are shorting it.
So it is a confirmation that it is
Yeah,
it
it is the confirmation, right?
it is just starting to lose its momentum.
Yeah, just look at this particular thing. Let me show you. Let me show you something. Okay. So here if you look, price comes down,
Yeah.
goes up,
Yeah.
comes down, goes up, comes down, goes up, comes down, goes up. What I mean by this particular thing is, how I view this, let me show you. So at this particular level, if you will see that divert RSI value, it is below 30,
Yeah, it is somewhere around 20. Yeah.
below 30,
Yeah.
and at second top it is somewhere around 37 level.
Yeah.
So it is I guess around it is less than 20 only, it is I guess 15.
Yes.
15, then it is 37. At third top it is around 37 again,
Yeah.
and at this particular level when price is up, so it is again at this same particular level. So
Yeah.
what does this thing indicates? Some sort of high divergence,
But-
because the first
yeah.
top is less than 30.
Yeah, it is around 15, and it is obviously doubled in the following
Yeah, right.
one.
So now what you will do, you will, in case of double bottom, you will buy at this particular level by looking at any bullishness. Let's say you have found a bullish candle here, okay, at this particular position. Let's say that you have found a bullish candle here.
Yeah.
You have found a bullish candle, and then you are like, okay, now I will buy. So if you will buy, keep the thing in mind that the neckline of the double top or double bottom, if it is larger than half the leg, okay, if the neckline is larger than half of the leg, so the first target is neckline.
Oh, fine.
Okay, so let's say that the leg level is of total 25 pips, and the value of neckline is at 17 pips. So the first target from this level is our neckline, then this should be the second target. The first target, then this should be the second target. Understand?
Yeah, getting
Or
it.
the best thing, take 20 to 25 pips of the first target. So if you, let's say, buy at this particular point, and then you are like, okay, it is going in my direction, here. How many pips it is?
So it is 0.31. It is around
Around 30, 20,
30,
27,
30.
right?
Yeah.
So is your target met?
Yeah, it is more than 25.
So
Enough.
technically you can exit.
Definitely.
Definitely you can exit, right? Now let's say that you have exited with I guess half of the position, or more than that of your position, okay.
Yeah.
So if you have exited, so what you will think that, okay, now definitely it went down, and then you are like, okay, again it is in the same scenario, price is getting up at same level, and RSI is for getting high. So definitely I will add one more position at this place, and I will again take this particular trade. So I will initiate entry, I will take some 20 to 23 pips out there. So this is how it works. This is half a strategy that I have covered today. The next half we will discuss tomorrow, or I
tomorrow
guess
day.
not tomorrow, I guess next day after tomorrow, okay,
Friday.
because it is a double top that we have discussed today, okay.
Yeah. Yeah.
I want you to just go through the charts and look that how this particular thing, is it exactly working or am I lying, right?
Sure, I'll just.
So definitely, so prove me a liar, I will more than happy.
Yeah, I'll just go through it.
Yeah, definitely. So you will go through it, and on the next upcoming day we will discuss in deep that what are the things that we have to keep in mind while trading double top and double bottom. But as of now, you will just focus on double tops and look on RSI candlestick patterns and see that how is it working. Always keep in mind that don't ever use this strategy in trending market.
In trending market.
The
Either
only drawback of this strategy, if market is trending, don't ever try to do this. If it is trending, don't ever do. If market is moving something like this, then do it.
Fine.
But if you see that on a 4-hour time frame it is extremely bullish, don't ever fight the trend.
Okay.
Yeah, so go
Definitely.
and check that how many time it is forming, and in the next session we will discuss double bottom and lots of aspects of double tops. Okay.
Sure. Sure.